there's such value both for your own inner health and for your finances in coming to this place of enough. And what I feel is the only way to get there is to find enough right now.
Welcome back to another episode of Get Your Fill, Financial Independence and Long Life, where we explore ways to achieve those two goals. And we invite really cool people on to help us. And that is why I'm so excited that today Spencer Sherman is with us. Spencer Sherman is an MBA. He's a CFP. He's a leading financial advisor, an author, a public speaker, and he's renowned for his mindfulness-based approach to money. As the founder and former CEO of Abacus, a values-driven financial consulting firm managing over $3 billion in assets, Spencer has transformed the lives of his clients and helped them to achieve financial success on their own terms. And so, Spencer, welcome.
Thank you, Chris. Wonderful to be here to talk about the taboo topic of money and retirement and all of that. I mean, it's applicable to everybody. So I love what you're doing.
Oh, thank you. And I love what you're doing.
Yeah.
So what does it mean to you when you say people to create financial independence on their own terms?
Yes. It's a very generic kind of sentence. And as I listened to that sentence, I said, there needs to be some flesh on the bones of that sentence. So what we have, unfortunately, with money is we have very strong currents at telling us what to do with money, what to buy, when to retire, who to work for, all of that. And on your own terms is easier said than done, but it's letting go of some of that cultural tendencies, or even, what we grew up with in our families, and really tuning into our own inner compass and saying, what is it that I really want? And one of the ways you can make that happen is you look at a blank spending intention statement, and I have these on my website, and fill it in as if you're starting from scratch. Like, what would you want to spend on groceries a week, or mortgage, or dining out, or vacations? And just let your imagination go, do it as a blank canvas, and see if you can create a plan for yourself that's independent of what your parents might say, your siblings might say, your friends, the culture might say. So that's what I mean on your own terms. And for some people, that, doing your financial life might be working till 65, retiring and playing shuffleboard. For others, it's retiring at 45 for 5 years and then going back to work at age 50. So I think all of those options are open for us. And it's like letting go of what we think we should do and really tuning in.
Yeah. And it's so interesting and so important, because as you were talking, I was thinking about the very different camps that you can listen to, right? Dave Ramsey,
Yeah.
no debt.
Yes.
Robert Kiyosaki, use leverage, use all the real estate people. You want to leverage? No, you don't want any debt. You don't want a mortgage. You want a mortgage. And you can just go nuts. And like you say, a lot of us come from families where you just, money wasn't plentiful. We don't necessarily feel comfortable spending money, letting go of money. I know people who are millionaires who don't want to travel first class, and I guess a millionaire isn't that much anymore, but people who have a lot of recurring revenue, a very healthy amount of recurring revenue, money that's coming in without their working, and they still feel like, ooh, I don't know if I should be spending this. What if we're broke tomorrow?
Yeah.
Well,
So
you
you're
won't have any
pointing
great
to some,
memories of having great trips.
yeah, Chris, you're pointing to something else here, is that a lot of us stay in our heads around money. There's a lot of rumination and fantasy. Rumination tends to be more in the camp of worry and anxiety. And then there's the fantasy of like winning the lottery, but we don't actually get the checkup and say, can I afford the first class? Instead of ruminating about it,
Right.
or, being in fear of it, check it out. Do the math, or hire someone to do the math for you and see how would this impact you to do that epic vacation, or to maybe take a less intense job. I mean, I've been working with a woman who's been making a lot of money in tech, working for one of the big tech companies. And then through financial advising, she realized, like, I don't need all this money. And it was this wake up to her. It's like, wow, it's like my whole company's pushing me, but in that push, there's a lot of burden because I got to take on 70-hour a week work weeks and all that. And there's all the frills of it. I get to fly first class and all that stuff,
Yeah.
but it comes at a huge price. And here I am, she's like ending her 50s, and she's saying, no, I don't want to continue. So she went to her supervisor, boss, and said, I want a different work life here at this tech company. And they gave it to her. And she is so thrilled. She's making less money, but the projection showed that she absolutely is going to be fine with that less money. And she's like so happy that she realized it, because other people wait till they're 65 or never realize it, you know?
And that's becomes a really difficult transition, right? From like
Yeah.
push, 70 hours a
Yeah.
week. And then all of a sudden you're like, ooh, I've got
Yeah.
nothing to do, floating through life. And then depression sets in. You lose that feeling of purpose and excitement about life. And if you can
You
just,
could, yeah. You mean if you go like cold turkey? She went from probably 60 hours a week down to 40 hours a week.
yeah,
So for her, she's still feeling very purposeful, very alive. She just doesn't feel that she's sold her whole life to the tech company.
right. And I'm 100% agreeing with you,
Yeah,
right? I'm
yeah,
saying, if
yeah,
she would have just
yeah,
kept pushing and pushing and
right,
pushing, and they're like, okay, is this what I've been working for all this
yeah,
time of this life of doing nothing, having nothing,
yes,
right?
yes, yes, yes. But it's easy to get caught up in that, right? And one needs to take a look at some points. And this is where a financial coach, a financial advisor, having that outside perspective can be so valuable. And just saying, wow, does that make sense? And maybe it does. I mean, I feel my role as a financial advisor is to really be in that unbiased, agnostic. I don't care what you do, it's your life. And maybe for you, working 80 hours a week till you're 90 is the right path.
Yeah.
I just think it's worth assessing that and knowing what your options are. And
Mm.
many people don't know what their options are because they've got tunnel vision. They don't know maybe they have enough money, or that there are other career opportunities they could take on that would still support them in their
Yeah.
lives.
Well, and that's what the value too of now, if she's working 40 hours a week, all of a sudden she's got some leisure time and she can develop
Yes,
some activities and
yes,
hobbies and things she
yes,
figure out what she likes and not wait till she's done
yes.
and retired and potentially not that healthy anymore. And right.
It's funny that you said that, both of us are saying 40 hours a week is sort of like a leisure life, whereas in most of the world, that's a very full work life. It's just in this culture, we think of 40 hours as being on the light side. It means
Yeah.
you're home by 5:30 or so,
Yeah.
and you've got your whole evening and you got your weekends.
Yeah.
That's considered like very normal in the rest of the world. Like you should have
It's
your
actually
weekends
right.
to play.
35 is like the
Like
norm, right?
35 is
Everywhere
right.
else.
Yeah, yeah,
But you're right. I know we do tend to work too much and that's not good
yeah,
either.
yeah,
But I feel like there's a middle ground, of course, and
yeah.
that's what you're saying too. Like maybe if you discover that you don't need this much money, all of a sudden, all kinds of different careers are also
Yes,
options for you. Maybe now
yes,
you could feel comfortable doing an entrepreneurial, making an entrepreneurial move and saying,
absolutely,
"Hey, I've got time
absolutely.
for a side hustle, something that I love, right? And
Yes,
that's going to just bring me tons of joy and maybe eventually become my full-time gig."
yes, yes. I think, there's certainly a group of us that don't save anything for retirement or save way too little.
Yeah.
And I think we have that sense of ourselves, but I'm noticing more and more of us are probably putting too much towards retirement. I mean, we've been so conditioned by all the advertising, save, save, save,
Yeah.
and we're doing it and we're paying down our mortgages, a lot of us. And maybe is all you need to do is make an assumption that at age 75 or 80, you're going to sell your home. Maybe just that one assumption is going to allow you to go to a lower paying job in your 60s, for example. So
Yeah.
it's like we think, oh, I got to keep going, keep going. Maybe not.
Right.
Um,
It's
and if
true.
you're
Are you
not
gonna
saving anything, start, this is the time to start saving something for sure, is figure out what can you let go of in your expenses. So, or put savings first is what I usually say, is just
Yeah.
make it like the first thing you do. Like, actually, if you exercise first thing in the morning, it gets done. First of the month, do that automatic savings.
Yeah, because we expand or contract, right, to
Right.
fill the available
Yes.
space and
Yes.
yeah, if you've got less, you just do with less. And if you've got
Yeah.
more, you can easily spend
Yeah.
it.
Yeah.
So
Yeah.
just take that little bit, right? Take that little chunk out and let it do its work there, the magic of
Yeah.
compounding interest. And do you find people getting nervous like now when things are changing, things are more expensive, maybe when gas prices go up and when interest rates go up? Do you find your clients are getting like, oh no, what now? Do we have enough? Oh, what are we going to do?
It seems like human beings, I mean, because I've been doing this like for over 30 years, it seems like us human beings, we always find something to worry about. And there's some research behind this that, from a neuroscience perspective, we are wired to look out for danger. That's we are survival oriented. And it's like, if we go way back in time, if there were you see two people are on the Serengeti and one's noticing the shadow of the lion, the other one is just daydreaming. Who's going to survive that over
Right.
time?
Right.
It's like, so we have a bias towards looking for negative things. If we miss the positive, it's not the end of our life. If we miss, there's a patch of strawberries there, no big deal. But if we miss the lion coming out of us, that is a big deal. So
Yeah.
we tend to look for that with our finances. We look for the negative, and the journalists know this. That's what sells things. So we can drive up our anxiety, all those, all that adrenaline, all that can get fired up just by reading something, let alone that something actually changed with our finances. It's just like some journalist out there in Idaho is telling us that the market is going to go down.
Yeah.
Wow. Well, and that's going to impact my day, but that's how we are. I mean, I'm the same way. That's why I have to really be careful how much of that stuff I read into. Right.
Yeah.
Yeah. So, yeah, I don't know what else I was going to say about that, but yeah, the anxiety. I mean, I think that there's the anxiety over when the markets are high. There's the anxiety of they're going to fall. When the markets are low, it's like they're going to fall further. And what I think the trick here is to look back over time, long stretches of time, and to see that there's always been impermanence. There's never been a long stretch where things just were like even.
Right.
There are market periods of up and market periods of down. And if we can accept that and just see that is part of this human life, if you want a different life, find another planet. But there is impermanence, there is ups and downs. I don't care whether you have billions of dollars, somebody in your small circle is going to die. Something's going to happen. You're going to have a setback with that money. It's just part of being on this planet Earth. And you can see that you got through the 2001, 2002 correction. You got through the 2008, 2009 correction. You got through the 2021. So, we start to see the 2022 correction. So, and maybe 2023, you start to see that you're capable of getting through these things and you don't need to panic. And in fact, I know that there are a lot of entrepreneurs out there, and we know this intellectually, but it's another thing to actually act on it, that when things are scary, when there's chaos, that's been shown to be the point of maximum opportunity. That's when prices are lower. That's when people are running for the exit signs. And that's when entrepreneurs fulfill their role in the world. Because entrepreneurs, the whole word is about like coming between. It's a French word. It's about seeing what's needed.
Yeah.
And that's a very important thing to be focused on. What is needed in the world? Not what do I think is needed, but what is needed by the world. And the entrepreneur then fills that need. And there are more needs when things are topsy-turvy than when things are, going so well. So I think it's a ripe time to be paying attention, to not let yourself get into that frenzied place. Because when we're in that fight flight place, like we're in that survival place, that something's, coming at us like an animal. But today it's the email, it's the newspaper headline. That's what's coming at us. And
Yes.
it's not real, but we make it real. It becomes real within our bodies. This is the time to see what, maybe there's a business opportunity out there. So I was sharing with you before we started that I just spent some time with the head of the Entrepreneurial Center at Brown University. His name is Danny Warshaw, and he recently wrote a book, and he's wonderful, and he has some really interesting insights from his decades of studying entrepreneurship, from teaching it, from doing it. And one is that the opportunities are now in the chaos. The other one is, and we're speaking of this, is that also sometimes in the chaos, we have less abundant resources. Or at any time, maybe you might have more limited resources. And he says that's a bonus, that you are better off with limited resources. And this is very counterintuitive. Like, why wouldn't you be more likely to be successful with abundant resources? It's not what the research shows. The research shows that startups that have limited resources end up becoming more successful. It's sort of like necessity is the mother of invention, perhaps.
Yeah.
I think that's really fascinating. So that just gave me a boost of sort of energy to know that, wow, I don't have billions of dollars, but I'm actually might be better off than the people who do in terms of starting a new venture.
It makes sense because you're going to be more selective about the things
Yeah.
you implement. You're going to be
Yes.
more resourceful. You're going to be more
Yes.
looking for collaborations and ways to work with others and stuff.
Thank
It's
you for saying
fantastic.
that.
That's
Yeah, Chris,
excellent.
that's exactly what he said, that
Yeah.
you're much more likely to put together a really great team because you have to. You
Yeah.
can't, you don't have wiggle room. Whereas the person with tons of funds will say, yeah, that I want to work with my best friend, which he says is an absolute mistake. Not so much from the jeopardizing the friendship, but those kinds of teams aren't as successful. You want people who are different from you.
Yeah.
He says to look into your Rolodex of your sort of not so close friends, your distant friends, people that you're not in touch with on a regular basis. Look at those, that circle of people, and then ask people for referrals. That's the way to get a team of diverse thinkers, diverse backgrounds, all of that, create a much better, much more likely team to succeed. Yeah.
Yeah, exactly. You're not going to surround yourself with a bunch of yes people who are just going to agree
Right.
with everything you say, right?
Exactly.
Because they've got this cushy
It's
job they don't
very,
want to lose.
it's very counterintuitive, because I would think I want to be with my friends because we're going to have fun together. We're going to, cheerlead each other and all that. And my friends, we're different from each other. And he says, not as different as they could be. You tend to pick friends that are more likely like you, and you want people that are really different perspectives and skills and backgrounds and connections. You want to get all their connections, and that's going to be found by really searching for somebody who's not exactly like you. The other thing that he says that's interesting, he says, ironically, often teams, not only are they more successful, but they become deep friends over time.
Yeah.
When you connect with people where you have weak links at the beginning.
That
Yeah.
makes sense because you've got the time and you're working
Yeah.
together toward a common goal, and that does
Yeah.
forge really beautiful, strong connections.
Yes.
Yeah, it's interesting because I've had this summer, I had some interns and now I have some other young people here working with me. And they
Mm.
just think completely differently, of course, because
Yes.
they've, got 30 years on them. So
Isn't that great? It's great to
or
hang out with people like that.
yeah,
I've got a cousin who's 22, and I hang out with him, and I'm a mentor for him. He's a mentor for me in some ways, because he does bring that other. I mean, he's the one that told me about ChatGPT a year ago before anybody else knew about it.
yeah, yeah, exactly. And because they're following the trends, they're looking at,
Yes.
oh, I've got this like Robinhood. That's how I found out about that, was from some young clients that was
Wow.
years ago. Like, oh, there's this thing. And I'm like, wow, that seems a little risky.
Yeah. Yeah.
Because of the impact, right, that it can have on the market, with a whole bunch of people who don't know anything about stocks, or suddenly just empowered to buy it every, buy and sell on a minute by minute basis like that.
Yes.
So totally changing tracks here, Spencer.
Yes.
When people start to work with you, I mean, I love the questionnaire on your website. That just seems so
Mm,
fun and fantastic. Like, what do I want to be able to spend on groceries? What do I want to be able to spend on travel every year or every month or every week? And just kind of, it's a nice way to craft that ideal life that you are shooting for and to allow your imagination to soar. What are some of the other things that you do when you first start working with people?
mm. So we ask them a series of questions that have often have to do with death, because death is a great motivator. And I have a meditation teacher that says, it's like everybody's going to die, but very few of us think that's true, right? That death is something that happens to other people,
Right.
but it can be a great motivator, and actually it can help us live our lives more fully if we're cognizant of that. And so I might ask someone a question like, if and some of these questions, I don't know if you know George Kinder, he's from Boston,
Mm-mm.
a life planner. So he sort of gave me the idea for some of these questions, but I've shifted them, modified them a little bit. But think questions like, okay, if the world was going to end in 5 years, what would you do with the 5 years left that you have? These kinds of questions can often crystallize what's really important to somebody.
Yeah.
Um, and then the other thing I'm doing is I'm having them create a very minimal lifestyle. What's the minimal lifestyle that will just sort of get you by? I want to know that number.
Yeah.
And then I want to know the very comfortable number, sort of with the figurative, like let's say massages every month
Yeah.
in that column. I want to know what that range is from that minimal column to the more comfortable column, and then play with that in the projections. And then what I also do, which is so key, and you probably know the economist Daniel Kahneman. He talks about one of the most important things in investing is that people don't realize is what's your allocation between equities and bonds. Very
Mhm.
important. And that depending upon your financial advisor, depending upon your mood and what just happened in the last week with the markets, you might make a long-term decision about your allocation that's more to do with what happened last week or more to
Right.
do with your mood that morning. So I really try to look at the numbers with the allocation and say, what does this person need? How much firepower, volatility do they need in order to reach their goals? And I'm trying to give someone a sense of that mathematically so we
Mhm.
can make a less emotional decision about that asset allocation. And the other thing I've discovered, and Daniel Kahneman actually writes about this too, is that if this is a simple hack, but if you look at your portfolio less often, you will be wealthier. Now that is like, what? What? What did he just say? Something that makes no sense. It makes no sense. But here's why Daniel Kahneman says it's true. Is in his studies, what he says is when you keep looking at your portfolio so often, it has a negative impact on the brain. It creates more fear in us. It's sort of like if you're looking for what's wrong with yourself, if you're constantly judging yourself, that's going to, cloud your self-esteem is going to be lower.
Right.
And if you're checking the market every second, you're seeing more of these ups and downs. So you think the market is more volatile than it actually is.
Yeah.
And as a result, you will change your allocation over time, or you're more likely to jump out of the market when the market goes down, which is, of course, the worst thing to do from
Yeah.
any kind of scientific perspective, logical perspective. And yet we all, not only do we do it, but financial experts do it. People with PhDs do it. And that's why I say that emotion is as impactful as your knowledge when it comes to financial success. So just looking less often, like maybe look at your portfolio once a quarter, or if you can't do once a quarter, once a month, that will make you more money. Trust me on this one. You will not be as reactive to the volatility, and that's a very healthy thing, both for your whole being, for your mind, but it's also much healthier for your finances. to not have that overreactivity. And I think you can also get a sense of this if you look at the long-term nature of things. People will say, wow, this was such a crazy year. Look at, and up and down. But then you look at the graph over 10 years and you say, it's actually boring. This stuff is really boring. And yet the journalists have to make it exciting. So they focus on the very short term fluctuations, which are kind of exciting if that's your thing. But we don't care about that. We're not investing for the return next week or next month. We're investing for the return over the next 10, 20 years.
Right. Exactly. Well, and you bring up a good point about allocation, because I know there are a lot of people who, especially if they're invested in like their company's portfolio, their company's, whatever retirement plan, that they're going to make an allocation once and they may not check it again. And so one thing may have grown, another thing may have shrunk, and they're all mixed up, and they never go back and adjust. They don't sell when it's time to sell and buy when it's time to buy. Right.
Yes. That happened. I mean, I remember there were so many articles on this in like the late 90s as the tech market was going crazy, and people all of a sudden had like, 20% of their portfolio was in one large tech company. And their percentage of stocks versus bonds was completely out of balance. They weren't rebalancing, sort of like, rebalancing your tires. Like if one tire has too much air, you need to take some of that air, move it to a tire that doesn't have enough air. Not a perfect analogy, but it's so true for our investments. Is we want to that rebalancing. And the beautiful thing about it is it forces us to buy low and sell high, which is exactly what we want to do when you look at history. But we have a hard time doing emotionally. No one wants to buy low and sell high.
Right. It's true. You want to buy when everyone else is buying because it's exciting. And you want to sell when things are terrible because you don't want to hold on to that dog anymore. Right.
Right. That's the locker room talk, right? Like, oh man, you're still in that. That the market's still going down and down. You're going to lose more. I got out. I'm safe.
You're
safe now.
You locked in that loss. Good job.
Locked in the loss. Exactly.
Yeah, it's a scary thing. I mean, I think so few of us actually understand what's happening with the stock market and understand what isn't it much more fun to buy like 3 individual stocks or 10 individual stocks than it is to buy one boring old, ETF or something? I mean, how fun is that? Boring.
Yes. So there's that we seek excitement from our investing when we should be getting it from other places. Like go skydiving and have a boring portfolio is what I say. Keep it boring, because that's actually done really well over time. And here's an area of your life where you don't need to stress. There's a lot of evidence for keeping it boring, and you'll do quite well. The other thing that sort of gets to your point a little bit is there was an article in the New York Times about studies at Vanguard and Fidelity about who does better, men or women, when it comes to investing. And the results were dramatic. Women do much better than men. And of course, answering the why question is harder, but some of the journalists said that women are not so reactive. Women do not think they know something about the future. In general, women have not been as educated about money. Often they don't get as much education from their parents, or it's just not in our culture as much. But not knowing as much can actually be helpful with investing, because you just stay the course, because you don't have this idea like, oh, wow, I really think XYZ company is going to hit a home run next year. I know something, and that's what gets you in trouble. You think you're the only one who knows something, but there's a million other people who know it, and it's already priced in. And you can't, that's where it's a fallacy that you can actually get an edge on somebody else. I mean, that you're moving towards gambling if you start thinking that way, is what the evidence shows us. But the results were so dramatic. Like women are just much better investors. So maybe that's my next book, Invest Like a Woman.
Right.
They just keep it simple. And, it's funny because I was once with a potential client, And I was talking to her and she said, I know nothing about investing. So I said, well, I just want to play a game with you. I said, how would you invest given that you know nothing? And she said, come on, Spencer, I just told you I know nothing. I know. So I kept pressing her. And it took about 10 minutes. I said, you know. She finally surrendered and said, you know what? Given that I don't know anything, I'd invest in everything. I said, that's the right answer. That's the right answer. You'd invest in everything. And that's another reason I think, why sometimes the less sophisticated person does better, because they'll spread their money out in everything, as opposed to thinking, I know that the tech stocks are going to go up next year. I know
Right.
that Europe is going to outperform the US next year. That's the
Yeah.
kind of crystal balling that gets us in trouble.
Absolutely. And that is it. And then there is an ego component, right? You want to
Oh
be able
yeah.
to brag to your friends that you did such a great
Yes.
job. Oh, I bought that at $5, you know?
Yes. Yes. And and so many of us have that example, but we don't talk about all the companies we bought at $5 that went to zero. Uh, right. Right. Yeah.
Well,
So,
and
so true.
and I yeah, I can honestly tell you that some of the worst losses that I've had have been after some guy has given me this hot tip that,
Yeah.
oh, this company's gonna go. I remember one time a friend of mine who does day trading, he told me, I'm watching this company and they're really great and they make these bulletproof vests and they're lighter and they're better and blah, 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 blah. And you got to buy this. I said, okay, fine. So I put just a small amount of money in there. Like, right, what can I afford to lose? I'm just going to put that small
Yeah.
amount in there and just see what happens. So great, small company, everything's wonderful. But then the president gets arrested for his third time of drunk driving, and now he's in jail, and basically the company's worth nothing. Like,
Oh,
why
wow.
did you tell me the guy was a drunk? Because that, you
Yes.
know,
Yes. I mean, this is all these company specific risks that we can get rid of the company specific risks by buying thousands of companies.
yeah,
And this is what we do for our clients, is we don't want to take on that risk that one company making these bulletproof vests is going to, collapse because the leader, it gets in trouble. We
yeah,
want hundreds of those companies. So some of our companies will go bankrupt, but when you own thousands, you don't care if a handful of companies go bankrupt.
exactly, exactly. It's fun. Do you find when you work with couples that there are a lot of um, very different ideas, and do you have to reconcile it? Because I'm a
Yeah.
real estate agent. I find that a lot. Like this person's like,
Yeah.
I don't want to fix her upper, and I've got this great, and the other one's like, I don't even want to paint. I just want to walk in and hang up my stuff and be done. And
Yeah.
like, how are we going to get these two people into the same house? You know?
Yes. Yes. Yeah. No, I definitely find differences. And sometimes they're kind of like stereotypical. I mean, not always. I mean, sometimes the woman will want to, you know, will be a bigger risk taker. But oftentimes it's the guy who feels like you can hit a home run. Like, I want to know, like, can you tell me about any IPOs, any, stocks that are going to become the next Amazon or Tesla? I want to know about those companies. I'm willing to risk some of this money. So, then what I do is I'll create how much money can this couple afford to lose? And I'll
Yeah,
put that in a separate account and let that spouse,
that
um
cowboy or cowgirl.
yeah, yes, exactly. Exactly. It has been the woman occasionally, but it's the man. And let them play with that. But now they know, and the other spouse knows, that it's okay. If that goes to zero, it's fine.
Yeah,
If it quadruples, more power. Then now they have more money to play with.
right.
So that's been a way to resolve that for couples in a really harmonious way. Um, yeah, I mean, I think the other thing is that thing of how often do you look at it? I've had to talk to couples about that because, one spouse is like, "Oh, it drives me so crazy looking at the thing. I don't want stocks at all." And I say, "Well, that's what's going to drive return. That's what's going to allow you to retire early.
Yeah,
The odds are just in your favor. So what if you don't look at it so often?" And maybe we have quarterly meetings, and I'll tell you what's going on every quarter, but it's going to save you so much stress, right? I mean, you're laughing, right? Because it's so true, right? How many times in life with our investments or with other things have we found out about something, that we learned something that we didn't need to know?
yeah,
Right? It was like we could have just waited till the end of the quarter to learn about what our investments did. We didn't need to know about that big up and down during the quarter. It's sort of like when you get an email from a friend and it's like, it looks like a strange email and you can get all upset about it. But if you just wait, often the friend will send another email. Whoops, sorry about that.
Yeah.
The spell corrector, I didn't mean to say that. Right. I mean,
Yeah.
that's happened so often at work where
Yeah.
I've overreacted to an email at work. And if I just waited, it would have been better. And I think that's so true with the stock market.
Yeah, absolutely. Absolutely. And it sounds like, Spencer, you have to do a lot of educating
Yeah.
in your role. Yeah.
Yeah, educating. I mean, I think there's educating, there's inspiring, there's getting people to see that there are no absolute guarantees. Unfortunately, we just don't live on that planet where you can offer anyone any kind of guarantees,
Right.
right? I mean, it's like a doctor can't offer you any guarantees, and a financial advisor, a lawyer can't offer you any guarantees. Nobody can offer you guarantees. And but I help people see that if we focus on the things that have the high probabilities of success,
Yeah.
that's a pretty good path to walk down. I mean, why would you want to walk down a path that has like a 1% chance of success, which is often that path where you're, maybe like not putting anything in stocks, or you're only want to bet on 2 or 3 companies, that has a 1 or 2 or 5% chance of success. What about if we do something that has like a 95% chance of success?
Yeah. Yeah.
So
Absolutely.
that people really like hearing it that way. Like, okay,
Absolutely.
I get it. There's a chance that anything could happen. There could be this total nuclear war or whatever.
Of course.
We cannot protect you from everything. And if we do, it's going to take away your current quality of life. If we build in so many insurance policies, so it's like that balance, right? Because we find that literally with insurance, right? We have to have a balance with our insurance. Otherwise, you can spend your whole paycheck on insurance policies,
True.
right?
Yeah, it's absolutely true. You can't, and there's no quality of life. There's no fun.
No fun, no quality. Yeah. Yeah, exactly.
Spencer, what do you think of the 4% rule?
For withdrawals from a portfolio.
Yeah, that just seems
Yeah,
like I think I need like $5 or $10 million for that.
I know. I know. I think, I know some financial advisors who say, no, it's not 4%, it's 3%, which is like even
Even
worse.
better.
You could even, you mean you can only take out 3%? That means if I have $1 million, I can only take out 30,000 a year. And I think we as financial advisors are very biased towards making sure someone doesn't run out of money, because that's the only way you could sort of get sued. Is you can't get sued for leaving too much money at the end, even though that can be a problem, a big
Yeah.
problem. That you tell me to only take out 30,000 a year, and now I've got all this money and I'm 90 and I have no interest in doing the epic vacation. So I try to find a little balance there. I usually aim for like 4 to 5% withdrawals, but it depends on the life expectancy that the person thinks they're going to have.
Yeah.
What backup plans do they have? Do they have houses that they could sell, that they're open to selling along the way? Do they have family that might support them if things don't go well? So I look at a bunch of factors, but I usually feel that most of us, including myself, sometimes are sacrificing a little bit of too much of the present for the future.
Yeah.
That we're having people live on too little money right now. I mean, the other thing I try to get people to do is let's make some assumptions about your future. Like once you hit 80 or 85, you're not going to be doing vacations, because very few
Right.
people want to be, stuck somewhere in the Paris airport for 2 days, when you're 85 years old. It's just no
'Cause
fun
that's
at
the
that
thing,
age,
right?
and your luggage gets lost. It's like but that's a big expense for a lot of people, is
Right.
those vacations, and we're not
Yeah.
doing them. We're not shopping for all the clothes anymore.
Yeah.
We're not even dining out as much because we just want to be more quiet. It's like a hassle to go out as much when we're 85.
Right.
So if
Right.
we can make some of those assumptions about our expenses, then maybe that allows us to withdraw a little bit more today. Maybe we can get up to 5 or even 6% today if we know that our expenses are going to be so much lower in 20 years.
Right.
So
Right.
those are all the things that I play around with to come up with something that might work better for people today.
Yeah, it's quite a craft. It's quite a skill,
Yeah.
right?
Yeah.
It's an art. It sounds like an art form.
Yes, it is. It is. I mean, there's a combination of science and then also intuiting and really listening.
Listening.
I mean, I always say one of the what I think makes a great financial advisor is when you can listen so well, you and ask the right questions that your clients could come up with their own answers because they have more wisdom
Yeah.
than you do. They know their situation better than you do. And if they come up with the answer, they're more likely to follow it than if you tell them what to do. So
Yeah.
part of it is really is listening well, responding, asking, great questions. How are you going to do that? What if that doesn't work out? How has that worked for you before? Just really getting curious and not bringing your bias, bringing what I call a beginner's mind. That curiosity, that beginner's mind will help your client get to their own answers.
And that's like coaching. That's what we
Yeah,
do in coaching, right? You don't
right.
want to be just like, hey, all right, here's the prescription, right? This is what you
Yes.
need to do. Here's your allocation. Go home. I'll
Yeah.
see you in 10 years, right? It's just,
Yes.
you're right. That you want their complete they want to understand what's happening. They want to
Yeah.
understand why they're doing that. And I'm sure that makes the whole process much easier for everyone.
Yes. Yes.
So, Spencer, what's the program that you have, the online program that you have coming up?
Yeah. So I have one on January 7th. And it is a 10 a.m. to 4 p.m. That's Pacific time. So it's a live program. So 1 p.m. What's that? 1 p.m. to 7 p.m. on January 7th. And that's open to everyone. It's a program that kind of brings in how do you work with your emotions around money. And I've been doing this one for 10 years and it's on a donation basis. So feel free to show up and you can pay whatever you want. I also have an ongoing program called Fearless Finance, which is a monthly program with a live session with me. And there's a recorded course as well. And you can check all this out. I also have these free resources on my website, and you can get all that if you type in Spencer-Sherman.com/free /free Spencer-Sherman.com/free. You'll get my list of free resources, and you'll also get notices of other events that are coming up.
Fantastic. So we'll
Yeah.
put all that into the show notes for
Great.
you so you don't have to try to
Great.
write it down while you're driving. But Spencer,
Great.
that's fantastic. So what what do you wish I would have asked you that I haven't asked you? What
Oh,
do
that's
you
a
want to
great
make sure that people
question.
know before we part for the day?
That's a great question. How do you shift your mindset from always feeling like you need more to this place of enough? So one is to recognize that it's universal to always want more. Everybody wants more, including, believe it or not, billionaires. That we all want more. There's always something else we can buy. So to recognize that, and also to recognize that every time you said to yourself, well, when I get to this place, I'll be okay. When I get married, when I buy the house, when I retire, when my kids leave the house, when my portfolio reaches 1 million or 5 million or 10 million, then I'll have enough. And probably when you cross those thresholds, you felt enough for maybe a day or a week.
Yep,
And
and
then
keep moving that
you
bar.
created you kept moving the goalposts, right?
Yeah.
And there's such value both for your own inner health and for your finances in coming to this place of enough. And what I feel is the only way to get there is to find enough right now. I don't care if your finances are an absolute mess. Find a way for what you have to be enough right now.
Yeah.
And that will start to train your brain to be oriented towards this place of sufficiency, which I believe is a boundless place to be in. Like when you're no longer striving for things to be different, you're no longer striving for your 5 million to get to 10 million, you're more relaxed. And when we're more relaxed, our brains function more optimally. We're making wiser decisions about our finances. And there's the irony. We're more likely to get to those bigger numbers, but we're not craving for it. We're not feeling like we have to, like we're going to be okay once we get there. We're already okay.
Right. Right. No,
So
that's a fantastic point. And
yes.
that's all it brings in the law of attraction and all kinds of
Yes,
other good,
exactly,
right?
right? Right? I mean, we know from the dating world that if you're sending out if you're transmitting that you're desperate, you're
Yeah,
not as
that's just
attractive.
not a turn on. Yep.
Right. And
Money's the same way.
it's the same with our finances, that many of us are transmitting a sense of desperation. And what if you showed up at work today or tomorrow and you're transmitting a sense of enoughness? I think you're more likely to get a raise next January.
Yeah, you're absolutely right. Oh, awesome. Spencer,
Yeah.
thanks so much for being
Yeah.
with us. I love talking to you. I love your energy. You're a fun
Me
guy.
too.
And I would definitely trust you with my money.
Thank you, Chris. That means a lot to me. Wow. Thank you. Thank you. Well, it's really been great. You're a great host and you ask great questions and
Thank
you're
you.
so devoted, I can tell, to your audience to really make a difference for them. You're not just doing this just to do it. You really want to make an impact on their lives. So thank you for bringing it on.
Awesome. Thanks for being with us. And
Yeah.
thank you, listener, for listening. Who do you want to share Spencer with? Come up with, why don't you just like right now, think of at least 2 or 3 people that you want to share Spencer's message with and forward this episode to them because I know they will thank you. And then I hope we'll all see you on January 7th for Spencer's program.
Yes.
And in the meantime, have a fantastic week.